Hey everybody, Jim Hiles. It is Market Tuesday because we had Labor Day yesterday. Hope you had a nice weekend. We pretty much came off a week which it really wasn't all that bad. The indices were up at record levels again. August turned out to be a positive month, which generally when you talk to most people last month, that was no one thought would be up 3% in August with these record highs we've been doing, but that seems to have been the case. Growth has led value, so that's one of the reasons we're seeing these highs, particularly on the S&P. We have noticed that also there really has not been a pullback here for quite a while now. Since October of 2020 was the last 5% pullback. Doesn't mean that we're going to have one, but certainly increases the odds that we will. Let's look at the underlying economic news. Shrinking jobs. Well, unemployment rate's down to 5.2. That's good. Consumer confidence is actually lower than what it was 6 months ago. So when you see what's going on around consumer spending money, it seems to be slowing down a little bit. Maybe this is the Delta variant creating this, but we're also seeing a changeover now in the let up of the government stimulus. So we'll see what happens with that. When you have free money, it's easy to spend. However, we're looking underlying at Wall Street. They're looking at analyst estimates are actually pretty positive going into the third quarter, and you're seeing the manufacturing sector increase and pick up an acceleration, which is always good signs. So far, we are still risk on, people. Risk on it is. And you look at the numbers here, there's a good reason why we're almost up to 20% across the board. The internationals came back a little bit, and you can see some of the players here. You still have a pretty big disparity between large and small, particularly on the growth side. That might mean that there's opportunity here. When you talk about the greed and fear index, pretty neutral, which is usually a good thing because you want that balance. You want to make sure there are enough buyers in the market to come in and drive the price up, and it seems to be the case right here. So we're still risk on long-term investment-wise. For most portfolios, we're looking to invest for more than several years. We like to be risk on. There are definitely some risk off components. So we say risk on, not in the gung-ho sense, but in the cautious sense. And that's the way we're looking at all these indicators at this point in time. One of the things you can look at is we do have portfolios. This is our choice portfolio. We're pretty much trying to mimic what's going on in the S&P, but add alpha based on what we believe our stock selection can be, looking at the large cash flow generators and the big franchise type stocks. So if you want to talk more about how do you get into individual stocks, this might be a way to do it. So Jim Hiles signing off for now. Look forward to seeing and talking to you next week.